Hi guys, good afternoon. This is Abid Khan and you are watching Karachi Academy YouTube channel. So we were doing IGCSE past paper, right? CIE IGCSE past paper. So today we have selected IGCSE past paper of year 2021, right? And its attempt October November. Paper is 0452, paper 1 MCQs based question and its variant 2, right? So this is multiple choice questions, the paper of multiple choice questions. How many time you have? You have 75 minutes. Total time given is 1 hour and 15 minutes, and total time is 75 minutes, right? And you have to solve 35 questions. So you got 2 minutes for every question. Try to capitalize your time on easiest question by doing them quickly so that you have enough time to do the complex one. So move on to question number 1. Let's see what question number 1 says. Okay, this is your question number 1. Which statement is correct? Okay, try to always read your question very carefully, right? The accountant prepares the trial balance, right? And bookkeeper prepares the financial statement. Actually here he is the questioner is comparing the two jobs, one of a bookkeeper and second one that of the accountant. Bookkeeper job is a very paid work job where he do a very preliminary work from recording of transaction till maintenance of trial balance. An accountant job is the premier one because he does all the finalization of accounts, like preparation of the financial statements and their analysis. So accountant is upper than the bookkeeper. Bookkeeper do all the basic works till trial balance and the accountant prepares. This is a normal practice. So let's see what the options are given. So we will okay, what options are given? The accountant prepares the trial balance. This is very much incorrect. He is not supposed to do the trial balance. It is bookkeeper job, and bookkeeper prepares the financial statement. No, this is also very much wrong because bookkeeper is a does very basic job. So this option number A is incorrect. Move on to D. The accountant writes up the journals. No, again journals, writing up the journals is a basic work done by the bookkeeper. So accountant doesn't do it. So this is wrong. And bookkeeper write up the general accounts. Yeah, this is right. But due to this incorrect, this whole is incorrect, right? The bookkeeper writes up the journals. This is very much right. Accountant prepares the trial balance. No, this trial balance, again, this is done by bookkeeper. So this is incorrect. Due to this incorrect, this section, the whole option C is incorrect. Right, now move on to D. The bookkeeper writes up the ledger. Very much right. And the accountant prepares the financial. This is also right. So your correct answer is D. Move on to question number second question. Which formulas may be used for the accounting equation? Guys, remember what is the accounting equation? Accounting equation is very simple. Your capital and liabilities. Capital and liabilities will always be equal to assets. All the assets in the business will be financed either by the outsider liabilities, which can be a loan or the credit from the customers, and the capital. The capital is invested by the owner of the business, right? So all the assets comes in the business, and they through two means. One is the capital and other is liability. So whenever the capital and liabilities will be added, they will always be equal to the assets. Or we can also say, if you keep the capital here and these are assets, if you take the liabilities to the other side of the equation, So liabilities will become, this is positive, so this will become negative. So another form of the equation could be this. Or if you retain the liability here, or if you keep the liability here, so capital will become a negative if we take it to the second side of the equation. So assets, so this three, the basic one, this is just the basic equation, and these two can be with the other forms of this same equation. So let's see what he is saying. Which formulas may be used for the accounting equation? Assets are equal to, so assets are always equal to capital plus liability. He is saying owner's equity minus liability. Owner's equity, this is owner's equity. Capital is owner's equity minus liability. No, so always it is added. Minus liability, this is wrong. So minus liability, this is wrong, right? Due to, as this is wrong, option number 1 is incorrect. Liabilities equal assets minus owner's equity. You see, when we keep the liability here, the capital or the owner's equity become negative. Asset minus capital equal liability. So liabilities equal asset minus assets minus owner's equity. So as per this equation, this is correct, right? So this is correct. You can compare it, you can match it with this. Owner's equity equals asset plus liability. Owner's equity always equal to assets minus liability, and he's saying asset plus liability. So plus liability is wrong. So this option number 3 is also wrong. Okay. So fourth one is owner's equity plus liability. Owner's equity plus liability equals assets. So this is actually, it is the original form of the equation. So this is also correct. So option 2 and 4 are correct. 2 and 4. So your answer is C. Move on to next question. Purchased. Okay. Goods purchased on credit from Zamir were returned by Ashwin. Okay. So just hang on. Okay. What he says, goods purchased on credit from Zamir. Okay, he's buying from Zamir. Zamir is supplier, right? And written by Ashwin. Ashwin is a buyer, right? Ashwin buys from Zamir and Ashwin returns this to Zamir. Which entries should Zamir make to record? So he is saying, what question says, you have to show entry in Zamir's book. So Ashwin is the buyer and Zamir is the seller. He's a supplier, right? So how returns entries would be made? You see, what this is very much simple. If you see, this is Zamir book. Zamir books, and these are the Ashwin books. When Ashwin purchases from Zamir, what entry is done? Purchases debit, and Zamir credit, whatever the amount is. And what entry Zamir makes? This is it is purchase of it is Ashwin's purchase, but it is sale of Zamir. So Zamir will make sales credit to the same amount, and he will debit Ashwin, right? So what Zamir is returning goods to Ashwin. Now when Zamir returns goods to the Ashwin returns goods to Zamir. Ashwin returns goods to, so this will be purchase return, right? Purchase return he will credit and he will debit Zamir, right? Ashwin will debit Zamir. What entry he will make? This purchase return will be his sales return. So he will debit sales return and he will credit Ashwin. So what he's saying, what they are asking, which entries should Zamir make to record? So Zamir will record sales return. Say Zamir, goods purchase on credit format Zamir, and we have to make in the Zamir's book. Okay, so Zamir will make this sales return will be debited and Ashwin will be credited. So he will, this is his sales return. So hope this question number 3 is quite clear. So quickly move on to question number 4. What question number 4 says? During her first financial year, okay, just hang on. What is this? Question number 4. Question number 4, during her first financial year, the trader paid 1800 for insurance. When? In the first financial year. Okay, and 3000 for rent, right? No issue. 3400 for 3200 for rent, and this is the payment that he has made payment. Okay, no issue. We can see this. We can okay. If you see insurance, how much he has paid? 1800. So insurance expense or insurance debit 1800, bank credited. And how much he has paid on rent? 3600 means rent debit and bank credit. 3200 they have paid during their first financial year of their company. 3200, right? At the end of the financial year, he transferred insurance of 1500, right, and rent of 3600 to the income statement. And you remember, when we make the income statement, so we prepare income statement based on the matching concept. Periodic revenues are compared with periodic expenses. If you are making a income statement of 12 months or 6 months, whatever, so you have to, if I say you are making a financial statement of 12 months, so you will take revenues of 12 months and you will take expenses of 12 months, right? So same period expenses should be matched with same year revenues or vice versa, right? So for the year, and when we compare them and all the expenses are close to means close in the profit and loss account, and all sales are also closed in the revenues are closed in the profit and loss account, or what you say, the statement of profit or loss, right? Or also we say income statement. So they have paid 1800, but they have transferred, it means their yearly this is their yearly expense, and what they have done, so 1800, from this 1800 1500 they have transferred to the expense, so remaining 300 is still their prepaid insurance. This is asset. So 1800 was initially an asset, current asset. Out of this 1500 have been charged to expenses, so you have 1800 in prepaid, right? And what had happened here, so you paid rent for 3200, but your full year rent was 3600, and what you did, the 3600 you charged to P&L. So what entry is done normally? 3600 is charged to income statement, right? So it means this balance, so here if you see this 1800, out of this 1500 is charged to income statement, right? Then 1800 minus 1500 or 300 is your balance brought down as a 300, your balance brought down. This is carried down. Likewise This 3600 is your total expense, total revenue. So, and actually you have 3400. Okay, this 3600 is your total expense for the year. So, and 3200 you have paid, it means 400 is still you have to pay. This is your credit balance. This is your credit balance brought down. So this is your liability. So this 300 is your expense. What is this? What do the balances remaining on the accounts at the end of the financial year? So very much clear. On insurance, on debit side, you will have 300. You see, prepaid expense. This is a prepaid, and there will be a outstanding of 400. So if you see accrued insurance expense account, accrued, no, this will be a prepaid one. Accrued, no. So this is no, this is no. Prepaid, yes, this will be prepaid. This is also correct. Now, what the rent account, what will show? Actually 3400 is more, is 400 credit balance. Credit balance shows it is the liability. So this is your accrued expense. So this is correct. Prepaid, no, it is not correct. So since this D is incorrect, so your correct answer is C. For question, answer is your C. Move on to question number 5 quickly. Okay, question number 5. What question number 5 says? What question number 5 says? Lee bought goods 8,000, okay, less 15% discount, okay. She returned 15% is your trade discount. She later returned half of these goods, as they were faulty. Actually 15% is trade discount, so it means your purchase are 100 minus 15%, 85%. Your net purchase is 85%, because trade discount, always remember, trade discount is never recorded in your book, right? Put on the payment discount or the settlement discount, cash discount, that is recorded in the books, but trade discount does not, we do not record in the book. So entry is always made net of trade discount, right? So this are 50% of this would be 4,000, and it's, if you deduct 15%, then 85% of goods would always be, just hang on, okay, 4,000 multiplied by 0.85, so this is 3,000. The goods are of 3,400, and when you are returning the goods, what entry? It is your purchase return. So, and which document did Lee issue? Actually, guys, remember always, when he bought this 8,000, 8,000 means 8,000 into 85%, means 15%, after deducting the after deducting 15% of 6,800. You remember, when we buy goods, so actually we make entry for 6,800. D bought goods, later goods, okay, 6,800. So entry was made purchases debit, and trade payable, whatever the creditor was there, you credit this, and when you return this, actually what you do, you, when this 3,400, when you will return this will be your purchase return. So you will purchase return, you will credit, and you will debit trade payable. Now what you are doing, when you are returning the goods, you are debiting your liability, your supplier, So you are debiting, so you issue him a debit note. Because when we buy, we credit the customer and it is our liability and it is credit, and when we return the amount, to the extent of return of goods, you will not be paying him, so that amount you debit instead of crediting, right? So if you are debiting that amount, you will issue a debit note. So he's saying credit note, no, this is wrong. Debit note, yes, debit note, he will issue a debit note of 3,400, right? Credit note 4,000, no, this is wrong, this is wrong. So your answer is B, right? Okay guys, question number 5. Now move on to question number 6. What question number 6 says? What is a check counterfile used for? Actually, if I give you some understanding about the cash book, check, if you see, this is your complete check, right? This is it is basically the counterfoil. This counterfoil remains with your book, and when you make the check, it is check number, okay, and check date, right? Here you write pay to whatever guys you pay, and here you show rupees or dollars how much you are paying. Here is your authorized signature, you put your signature, right? If you are paying some, I say, if you are paying some amount of $1,000 to Arshad, so same you will, the same check number appears here, check date appear here, pay appear here, amount appear here. So you same thing you record here, Arshad and 1,000, and check number is the same, and you put the date, right? So this portion you cut, and this you give to your customer, sorry, your supplier, your vendor, you pay to vendor, this portion given to him, and this remains in the cash book. Okay, this is your record. It is this counterfile. If you have 50 pages, then here 50 counterfiles will be there, and those counterfiles are actually why we issue the checks we issue to make the payment. Whenever we issue the checks, our bank is credited, right? So this is very clear. Whenever you will issue a check, your bank will get reduced, it will get credited, right, in your book. And if you do not have any record, then these counterfoils are used to record your payments, right? So let's see what he's saying. To make a credit entry in the bank column of a cash book, to make a credit, okay, question number 6, to make a credit entry in the, okay, right, because when we issue the checks, if we are paying to Arshad, what we will do, we will debit Arshad with 1,000, and 1,000 we will credit bank, and this bank will be recorded in cash book. What is saying, to make a credit entry in bank column? Yes, this payment is recorded in the cash book on the credit side, so this appears to be a correct. To make a debit entry in the bank, no, this is wrong. Why? Because bank is always debited when you deposit money. When you draw the money, it is credited. So the second one is incorrect. To send a payment to a supplier, is saying where your counterfile is used. This counterfile you normally use to record your payments, your credit entries, right? To send a payment to a supplier, no, it is not. To send proof of payment to a customer, no. Why to proof of payments? You can, if you need, you can send the photocopy of check, okay, we have paid, or once you have paid, the payment will appear in your bank statement. You can as a proof of payment, you can send the in a copy of your statement. Okay guys, so the answer would be A. So we have done with 6 questions. So in our next lecture we will do question 7 and onward. So hope if you have enjoyed this lecture. If you have enjoyed it, please share, like it and share it with other students, and also subscribe our channel so that you get all the latest update. Thank you very much and bye for now.